Hello, everyone. I hope you guys are having a wonderful day and making some really good trades as per usual. And today we are going to be doing the 2024 market outlook and a bit of a recap too of what happened this year. And sorry, let me just get arranging my mouse here just a little bit better. There we go. All right. Now we can get this going here. So in 2024, I do expect a significant pullback in the S&P 500, starting off with the S&P. But this don't expect like a flash crash right away, right? Because right now we have a very strong momentum in the markets, and when we look at market cipher, which we're going to be covering the larger time frames as well on them, right now you can see increasing green money flow and continuing momentum waves towards the upside. So the price action may stall a little bit, and you may even get a bit of a retrace, but all that should be buying opportunity and a continuation push to new all-time highs next year. I have targets here for a potential top around 510 to 540 on the S&P 500. After that, we're just gonna have to wait and see what happens. Maybe finally the interest rate effects of extremely high, rates will start to take effect on the economy and earnings, and then you will finally start to see a deterioration in the economy, right? And after that, maybe we will get a bit of a drop in the market. But overall, everything seems to be okay for now. Nothing to complain about. We have low volatility, we have falling rates, we have falling inflation, and again, it's not to discount any of those things, but I know that there's been a lot of people who have been trying to short this market, myself included, and it's a very difficult market to short it because if the Fed reports one thing that's completely detached from the economy, what is the market going to do? They're going to follow the Fed numbers, and we've been getting, the Fed numbers basically almost coming in line every single time. It's how you say a perfect rosy economy. So the market is very, very happy when that tends to happen. And then that's why we had the very big melt up in the early parts of the summer in July late July. And then you had a meltdown back into October, which bottomed out beautifully at my support area. And we actually tagged it to a tick. And I actually am very surprised of the amount of reversal that we got from there, right? We had essentially a 20 to 15% rally off the lows. The market was basically up 16-15% on the S&P 500. I believe it was even more on the triple Qs. There we go, a 20% rally in the triple Qs, essentially into the end of the year. All right, now let's start to take a look here at market cipher on the weekly. So we just covered the weekly time frame. Let me just take a look at the monthly time frame here. And apologies if you guys hear me sniffing, because I am a little bit sick right now, but I am going to muscle through it and continue to deliver some key analysis for you all. So let's take a look here, excuse me, at the monthly time frame. So the monthly is showing a possible extension in the B wave here, but this would mean, to me, this looks like a potential extension in a larger move like this wave that we got going on here in a W pattern. So this would be an extension of a fifth wave. And when we look at the 12-month chart, so this is the annual chart, something that people don't really take a look at often. We're actually have to zoom out and take a look at some bigger picture here. So I actually outlined this in the previous some previous live streams, but I'll do it once again here. It actually fits nicely for the 2024 outlook. So as you guys can probably tell, we'll start off with the 08 crisis, or sorry, the tech bubble crisis. We actually printed a monthly red dot here, right? After yields, spiking and then the tech bubble bursting, we actually printed a yearly red dot. And then what followed after, we actually had a substantial decline in the market, right? Same thing happened in 08 where the yield spiked, right? And we had to hike rates very, very rapidly, and the market, could rally during that period of time. But when the rate effects kicked in, you can see we printed that red dot in January of 08, but then the meltdown came in 09, right? Later part of the 09 came, the later half of 2009, you really had that meltdown start to come. And that's when the prices really start to decline. Now we printed a red dot in 2023. Now, am I saying that we're going to get a meltdown in 2024? No, not necessarily. But the chances of us starting to pull back and the interest rate effects starting to kick in are definitely starting to increase substantially. And also, everyone is sort of getting on the same side of the trade right now. Everyone is getting extremely long in the tooth. Lots of YouTubers getting very, very long, very, very rosy outlook, just essentially following what the Fed is telling them, but it's not going to end well, right? So this when everyone's sort of following the same train here, where everyone's getting on the same train, it never ends well in these markets. All right, just give me one moment here. I just need to go get my tissue. I'll be right back. Won't take too long. All right, thank you so much. So essentially, what I'm expecting in 2024 is a continued move up into the markets, but a possible stall out once we reach the 510 to 540 area. And at that point, we could start to begin a bigger decline. And depending on the severity of the catalyst, it could cause the markets to decline very rapidly, or it could cause them, to have a slow grind down. Right. So, but the way that a lot of these stocks have taken off towards the upside, a more dramatic drop should ensue, right? Because we've seen, like, just for example, like a purpose, like just a quick example is like Affirm. You can see Affirm stock has gone up like 200% with a very short period of time, like 60 days, right? And that is not healthy growth for a stock, especially a stock that, when everyone was flush with cash, none of their model wasn't working and they were losing money. And now that nobody has any more cash and they're actually borrowing more than ever, and they're choosing to pay later with Affirm, but won't have the money later to pay them back, the stock is going up. So again, this is probably a great short opportunity, but could it go a little bit higher before that happens? Yeah, it could technically, but you actually had a really nice pivot from this previous pivot low to this previous pivot high. You actually had some pretty decent resistance here. All right, so let's get on here. I actually want to take a look at gold. Let me just get over here to the gold chart, because I actually do want to do some outlooks for oil, gold, silver, and natural gas. When we head over here, we take a look at gold. Gold has actually had another actually pretty good year this year, all things considered, because gold has taken out the all-time high. It's made a new all-time high at 2143, or sorry, a little bit higher than that, at 2148. And yeah, it could have just been caused by a short squeeze, but this is really starting to tell us something. When we look at the bigger pictures, like the quarterly chart, right, the 3 month chart, you're putting in a lot of bullish consolidation here at the highs. And now you're getting ready to break out towards the upside. You've already broken down this bearish divergence or this down sloping trend line here. You can see momentum is breaking up. So a very big move in commodities could come. And it doesn't mean that gold can't retrace, right? Gold can always take a dip back down if the dollar gets a bounce back up, which I think it should be doing very soon. The dollar is at tremendous support at the moment. And if the dollar bounces back up to, let's say, 103, 103.5, something like that, where it gets a little bit of a relief rally, then that means equities are going to take a slight dip down, like I have it illustrated here in the short term, just a little bit of short-term price action for you guys. If you guys are interested in short-term analysis. So this is when the dollar spikes back up, this could cause the markets to come back down. It could also cause gold to come back down just slightly. All right, I'm looking at the monthly charts or the quarterly charts, so it's just a little bit hard to see. But let's take a look at the yearly. All right, the yearly, you actually had a huge doji candle here. Let me get a bit of a better clean chart for gold. There you go. So you could see on the On the monthly, it's on the monthly. The yearly chart, you have a bit of a doji candle here, and then boom, a very nice reversal back up towards the upside. So now the momentum should actually continue up, right? So this is showing us that we could have many years of gold rising, and which would mean the dollar is going to start falling. Okay, but again, things can change, and you know, all sorts of different catalysts could change these price actions. Because right now you're looking at extreme long term, but for next year, I do expect the dollar to probably end up lower and gold to end up higher, unless we get a very big market meltdown. In that case, all equities are going to go down. All asset classes are going to take a hit in general. You're going to see gold, silver, oil, Bitcoin, all crypto is going to go down. And we'll take a look at crypto in just a bit too. Let me take a look here. I'll just put this back. There we go. Perfect. Okay, so let's take a look here at silver. So silver is a very similar situation to gold, but silver has a more upside, potential in my opinion. When you take a look at silver on the bigger chart, you look at this monthly downtrend here, and this is going back to like 2011. From this pivot high down to this pivot, you can see it on the monthly. It's attempting to break out, and it is trying to break out, right? So overall, it's getting ready. At any moment, silver could start having a very sharp move towards the upside, and it's going to be very hard to contain because once this starts going up, the shorts are going to have to cover because silver is the most shorted asset, I believe, in the entire world. It is constantly being pushed down and suppressed now. So once this really starts going, you get a very big short squeeze in silver. It could cause the price to go up like substantially. Like I don't want to say like hundreds of percentage points, but yeah, it could be possible that you could get a move to like $60-$80 within a couple of months if that really starts to happen. But that won't be good for anyone in general because silver is in a lot of things and it would cause inflation to go up even more. All right. Okay, so I think that feels good. And let's take a look at a few more things here. Let me just put this back down. I think this is in the way. Let me see if I can hide this control panel. Okay, there we go. Let's take a look at oil. So unfortunately, oil has decided to take its next leg down, which means that we'll get a bounce back up in oil in wave 2, but unfortunately, it will cause it to get in a wave 3 leg down, and that would lead to oil starting to head down to the $55 to $45 levels. And at that point, that would be an extremely long-term generational buying opportunity for me. I will be looking to accumulate once we get down to these levels, if we do get an opportunity to get down to these levels. But if that happens in 2024, you really want to get in because once the dollar starts to decline and they start to do quantitative easing again, because eventually they're going to have to cut rates and do quantitative easing because they will cause a recession. And I know there's a lot of people who have a lot of faith in the U.S. government not causing a recession, but they've never not been able to avoid a recession without raising interest rates, right? They're always going to cause one, and that's just because they're unable to manage their finances accordingly. But yeah, overall, I mean, once we get down to here, you could have oil go back up to the 120 to maybe even make new all-time highs, right? And that's going to cause a lot of inflation, and then that's why we are in a different kind of cycle. When we look at the bond yield, right, we are in the cycle has shifted. We are no longer just going to be going back to zero, right? It's not a go back to zero kind of thing. The yields will remain high for a very long period of time now. You've broken huge trends. When we look at the 10-year, right? When we look at the 10-year on the monthly chart, we've been declining for the last 40 years. And what is this? This is a clear breakout in the yield, right? You're going to get a retrace in yield. Don't get me wrong. The yields can maybe even come back down to 3%. Once that happens, right, you're going to have a very big bounce back. And then that's going to be like your wave 3, right? You're starting a whole new cycle. And that's why I say it's not going to be the same. You're going to do a wave 1, This is your wave one. It's finishing. Now you're going to do a two. You're going to do a retrace, and then you're going to have a three and a four and a five, right? And this is going to cause the rates to go up to 10, 15%. But this is many years down the road, right? I don't think this is going to happen in 2024. 2024, you should see yields coming back down and then doing QE, and then you'll see commodity prices start to shoot up. All right. Let's cover, and we'll actually take a look at crypto here. So it's actually, as we approach 2024, it's going to be a very big year for cryptocurrencies as the Bitcoin halving approaches, and I have been mapping it out for quite a bit of time here. We'll take a look at Bitcoin, and we'll take a look at the weekly chart on the, I believe it's the Bitstamp. Is this one? There we go. So the Bitcoin halving should be happening right around April. And that is not too far away now. We're only about 4 months away from April. And that should lead to a potential pre-halving crash. I believe we'll get maybe one last buying opportunity if we are lucky before the halving. And then if it does, dip after the halving, that's okay. So you could always buy then. But after that, Bitcoin should be on its way to new all-time highs as well as the inevitable, money printer will be turned back on because they're going to have to do QE to get the economy out of a recession. And I know there's been like nonstop talks about a soft landing. Trust me, there is not a single time, not a period where the government was able to avoid a recession, right? Because they don't know that they're in one until it's too late, right? And by then we've been in a recession for a year. So maybe they'll announce recession talks, maybe we're halfway through 2024, or maybe we're in the later half of 2024. But by then, it's going to be too late. Earnings will have taken massive hits. The market will have already foreseen it before the government sees it. And then finally, but yeah, that's basically my outlook for Bitcoin. Is we're probably going to get a pre-halving dip, or maybe a post-halving dip. But that's probably going to be your last buying opportunity because this marks the low down at 15,000 or 16,000 at Bitcoin. If we manage to take out this low here, then there's something much bigger at play in the markets, and you have actually you'll be seeing like the S&P decline substantially more than what the people think. That means you're going to get like a 30, 40%, maybe even 50% decline in the S&P. And that's why Bitcoin is taking out these lows here. But by that time, you have bigger problems than just Bitcoin going down, right? You'll have a lot of problems in the economy. All right. And then we'll finish it off by maybe taking a look at natural gas here. So natural gas has been a very tough trade this year. Right, nat gas has come back down. It's fading the low one last time, and now it's starting to pump back up. But can nat gas, go back to its all-time high? And my best guess is that yes, the nat gas will eventually get a huge move back up in 2024 or 2024, 2025 as the dollar starts to decline, and we finally get a very parabolic move up in natural gas, which we've seen in the past happen, right? Nat gas can get parabolic very quickly. And I do believe that we are going to see a very big move like that coming soon. When I look at the monthly chart, all right, let me just get rid of a couple of indicators. Maybe I'll get a better chart here. See if this one's better. Is this one better? Yeah, it's a little bit better. So when I look at the monthly chart, you have a very nice, because we just closed this month in the next, I guess in the next 35 minutes, the monthly candle is going to be closing. You actually have another beautiful bottoming tail. This to me looks like a whole new cycle, right? What you did is kind of an ABC correction down, not like the previous chart that I showed you, that was different. And this is now a whole new cycle up. So now you should be doing a 1, 2, and now you should be going in a 3, and you should be starting to take off, right? Something like this. You'll be taking off in a wave 3, and then a 4 and a 5, and then you should be set to go to new highs after that, right? So this should take you to new all-time highs. But yeah, overall, I'm like very long term, very bullish on natural gas, very bullish on commodities in general. And I believe it'll just be a little bit of an added bonus. I am very big fan of wheat at the moment. Wheat is a very good play, and I do believe in January we will be seeing a very large move towards the upside as well in wheat. So wheat is set to, explode up in January, February. But yeah, that is basically my market outlook for 2024. Commodities should perform quite well. And when we look at equities, they could continue to perform well in the early half of 2024. But once rates start to finally come down, and the reason they do start to come back down is because of recessions and negative outlook on the economy and declining earnings. Then in that case, rate cuts won't be so bullish anymore, and that's probably going to reason why the markets are going to start to roll over. Okay. So that's basically it. I hope you guys have a wonderful day and enjoy TradeZing. Remember, sign up. It's free, and you get amazing content once you get access to their website. You can get follow your favorite creators like me or Michael Whiteman. Actually, we do a lot of videos together now, and we're going to be doing a lot more in 2024. Have a wonderful day, guys.